Good afternoon, welcome to GrainTV. My name's Cody Bills. This is Logan Burgess. Today's October 26th, Friday, for the weekly wrap-up. Let's get right into the Fire Tip trading platform, see where we closed off the week here. As you can see, corn, beans, and wheat all had negative days here. The one thing that was interesting to me is that November soybean contract. It was trading down 10 cents earlier on in the session. We got some strength by the close. We only closed down -3. We'll see if that sort of strength can carry on Monday.
Right.
One thing that we're going to talk quickly about here is South American production. We know it's incredibly important. It's going to weigh heavily on U.S. markets. It's incredibly important in terms of revitalizing corn and soybean stocks throughout the world. Logan, you know, it's been very wet down there during their planting season.
Right.
What sort of developments have you been noticing recently?
Well, you know, Cody, we did just receive a update here from our friends over at Planalytics just today, really detailing sea surface temperatures in the Pacific here off the coast of Chile. If you take a look here, this is basically a heat map showing those sea surface temperatures. The pane on the left here is showing it on the 11th of October. The second one here is the 22nd of October. And the thing to note here is how much warmer the sea surface has become here just over this short time span. One of the reasons why Argentina has been getting a lot of precipitation here recently is due to this cold mass of water here in the area circled in 1. The concern about this area warming is that it could redirect the jet stream down below some of the key corn and soybean growing areas. Certainly not recreating the situation last year. We're not saying that by any means, but this does raise some concerns about the ideal state of growing conditions right now as they move through planting.
Yeah, you'd certainly think that maybe trend line yield with a warming sea surface may not be achievable here this year. That is the possibility that's being put onto the table here by these developing weather conditions. Now, we know it's been very wet down there. How has that affected planting in Argentina?
You know, just today we were speaking with Esteban down at the Buenos Aires Grain Exchange, and he was saying that while conditions do remain exceptionally wet down there, they do not expect planted acreage to be hit in a big way here. They are going to lose acres out to the east, but the western part of Argentina should be able to compensate for any lost acres in the east. So that's certainly good to hear from them in terms of planted acreage. You know, he did give us a acreage estimation. They're looking for 8.4 million acres of corn, 48.7 million acres of beans, and 8.9 million acres of wheat here planted for the current year. They don't have a production estimate yet. Obviously, that's going to be watched exceptionally close throughout the winter, kind of as you alluded to there. We'll keep you posted on that on GrainTV here moving forward. That's kind of our wrap up here for what we're looking for out of Argentina in the coming weeks. We're going to keep you posted on that here on GrainTV. Cody, I know domestically here in the cash market, we had some big moves here this week. What's kind of going on there?
Yeah, we're switching gears here, and we're really going to focus a little bit on the domestic cash market. The big theme this week was barge rates. Barge rates started to really move higher, and as you can see here, this is the barge rates index to the Gulf on the Mississippi River, and what you're seeing here is a rapid increase in barge rates. Now, majority of that increase was due to soybean demand, basically demand out of the Gulf there. We saw a lot of beans moving down the river. If you take a look, we'll just talk a little bit about corn. On average, the U.S., we saw a 1 cent increase in both corn and soybeans. However, in terms of corn, there's two things I want to highlight. One, the western part of the Corn Belt, we did see ethanol plants continue a very firm bid. You'll notice you saw 4 or more stronger here. That's mostly due to ethanol plants bidding it up. And the southern part of the Mississippi here, that has to do with barge rates, and that's actually where we saw a negative impact on basis for the southern part of the Mississippi. If you take a look at soybeans here, it's all the river. It really seems to be the river and the double crop effect on the eastern part of the U.S. Right now, we're harvesting those double crop soybeans in the eastern part of the U.S. That's affecting basis negatively over there. We're not getting the kind of snapback in the national bean average that we would typically see after that low in harvest. Now, in terms of the river here, we saw 10 to 20 cent increases in barge rates. That led to almost a 10 cent decline along the river. That means that basis there is really weakening, but it does mean that there is significant demand out of the Gulf for beans. So it's kind of a double-edged sword there for a lot of producers.
Yeah, you know, bean demand here has remained relatively strong. Missed the mark a little bit here yesterday in the export sales report, but obviously, you know, we've been saying it here for a while. Demand is going to be imperative to this market here, especially until we get those South American crops coming out of the fields here, coming into our spring here moving forward.
Yeah, and one of the things you mentioned, you said that we missed the mark on export sales sales. But of course, you know, remember, we're well ahead of pace in terms of overall export sales. Those bookings that we got late last year, we're still well ahead of pace, and what we're seeing is that grain being called down the river, and that's why we're seeing barge rates really tighten up here, and we're seeing basis decline along the rivers.
Yeah, certainly. Well, you know, the model that Cody